Hello friends, you can see here lots of clocks are running. It means we are out of time. So for knowledge, everybody is out of time and accordingly we must keep learning. Before start, I would like everyone to subscribe to my channel Tax Acharya so that you will keep updated with the new videos of knowledge on tax. Today we will learn alternate investment fund. What is AIF? What are the different categories of AIF? And what are their taxation rules? AIF is a privately pooled investment vehicle which collects funds from investors, whether Indian or foreign, for investing it in accordance with a defined investment policy for the benefit of its investments. And AIF are funds which invest in hedge funds, private equity, venture capital, angel fund, REIT, and many other AIF vehicles. These are specifically made for high net worth investors with customized investment needs. SEBI doesn't regulate AIF but has listed some rules for AIF regulation. 21 of the Regulation Act 2012 of SEBI has those regulations pertaining to AIF. According to the regulation, AIF can be established company in India, an LLP, a trust, or even corporate body. There are few exceptions to this AIF, which are family trust, ESOP trust, employee welfare trust, holding companies, and securitization trust. There are three kinds of categories of AIF: category 1, category 2, and category 3. Now, what is category 1? Category 1 AIF are funds which strategies to invest in startup or early stage ventures or social ventures or SMEs or infrastructure or other sectors or areas which is the government or regulator consider as socially or economically desirable. AIFs within the category invest in economically and socially viable startups and small and medium enterprise through venture capital funds, angel funds, social venture funds, and infrastructure fund. Before we move to category 2, let's see category 3. This category of AI focus on earning short-term returns through diverse or complex trading strategies. Cat 3 include hedge fund and private investment in public equity fund. Now, what is category 2 then? Category 2 AF are funds which cannot be categorized as category 1 or category 2. It means others, and this is the most important category. Most of the startups or other investors will fall under category 2 category only. These funds do not undertake leverage or borrowing other than to meet day-to-day operational requirements and is permitted in the AIF regulations. Now, what are the taxation rules of AIF in India? AIF taxation will depend and vary with each category. Categories 1, 2, 3 are taxed differently. For CAT 1, for category 1 and category 2, there is a pass-through status. Pass-through status means that AIF will not require to pay tax. The income will pass to the recipient or the investor, and accordingly, recipient or investor has to pay tax on the income. Now, nature of income earned by the fund. What is that? Other than business income. If other than business income is there, then complete pass-through will happen, and applicable tax rate to the unit holder means if you get short term, then 30%. If you get long term, then 20% on 10%. So accordingly, based on the nature of income, the recipient or the unit holder required to pay tax. AIF will not pay any tax other than business income. In the case AIF has some business income, then tax at AIF such income is not taxable for unit holder. So means AIF required to pay tax, and AIF formed a company or LLP tax at the rates applicable to the company or the LLP. So it means in the case business income company the AIF is earning, then they have to pay tax and they have to pay tax at MMR, which maximum go up to 42%. Pass-through status of Category 1 and Category 2 AIF. The Finance Act 2015 extended tax pass-through status to AIF that are registered with SEBI as Category 1 and Category 2 under AIF regulations. These are governed by a special tax regime as provided under Section 115 UB of the Income Tax Act 1961. Any income other than business income is exempt from tax in the hands of AIF under Section 1023 FBA of the Act. Such income shall be taxable directly in the hands of the investor of the AIF. Any income distributed by the investment fund except business income, TDS at the rate of 10% has to be deducted by investment funds under Section 115 LBB. So when AIF will share income with the investor or unit holder, they are required to deduct TDS at the rate of 10%. AIF shall issue Form 64C to the investor, which is the online form, which will be provided the breakup of the income attributable to unit holders. Breakup includes business income, long-term capital gain, short-term capital gain, and other income. The investor shall be chargeable to tax in the same manner as if it were in the income accruing or arising to or received by such investor had the investment made by AIF had been directly by such investor. Income taxable in investor hands shall be deemed to be the same nature and proportion in the hands of the AIF. Further, in terms of Section 115 UB2 of the Act, in case there is a loss of the fund level, current loss or loss which return to set off, such loss shall not be allowed to be passed through the investor, but would be carried forward at AIF level to be set off against income of future year in accordance with the provision of Chapter 6 of the Act. Investment fund compulsory required to file return under Section 139 4F. So these are the tax status pass-through, TDS, Form 64C, income tax return of AIF has been described. Now, taxation of Category 1 and Category 2 AIF, investors need to pay, means unit holder need to pay capital tax on the profit or loss you make from the fund. The duration here is important to understand whether long-term capital gain tax or short-term capital tax will be applied. In the case it is equity, more than 12 months, long-term 10%. In the case of equity, less than 12 months, short-term 15%. In the case of debt, 36 months, long-term 20%. Less than 36 months, short-term, normal slab rate. Immovable property, more than 24 months, long-term 20%. Immovable property less than 24 months, short-term slab rate. So these are the various tax rates on income which you get, unit holder will get from the AIF, and their tax rate has been provided. Now, category 3 AF has not been is not a pass-through, which means the income from such funds will be taxed of the investment fund level, and the tax will be to pass through will not be passed to unit holder. The category of fund is taxable at the fund level. This has no pass-through status. The highest rate of tax payment of the current slab profit sorry, by this fund. Category 3F pay tax on the following four types of income: short-term, long-term, business income, dividend income, and the tax rate has been provided, which is 15% or 10%, 37% according to the slab. Now let's see what are the challenges of the AIF, especially from the unit holder's perspective. The expenses which were incurred by AIF and for which no Form 16 have been issued. Investor has invested in a Tier 2 AIF fund wherein funds have business loss and short-term capital gain. AIF fund has issued Form 64C only for the portion of short-term capital gain to the investor. Hence, the benefit of loss is not accrued through Form 64C. However, the investor is still required to pay tax on the capital gain accrued to them. Further, the AIF fund allocated to the company their share of expenses but is unable to disclose the same in Form 64C as there is no such provision in the form. Hence, investor had to claim the same as deduction when computing taxable income without Form 64C. So it means that there is an income, there is an expense. So there is a provision to pass on only income, and Form 64C is designed in such a way, but there is no provision to pass on expense. Hence, this creates what we call loss situation to the investor and the AIF, necessary clarification required from the government. What are the benefits of the AIF? Greater returns, greater diversifications, hence low correlation, more to make investments in quality unlisted companies and high yielding real estate through VC and PE route. Since the equity market is racially valued, high net worth individuals are finding structured products in AIF space more attractive with capital protection along with appreciation, helps investor cross planning spectrum, diversifying portfolio and reducing volatility. Advertising Alpha Fund was the country's first area launched in June 2020, followed by ADS Alpha Fund, and then now there are a lot of has come up. So with that, now we are ending our session on the AF. This is very small session on the AF so that you can get a picture what is AF and how their taxation work. I once again request you all to kindly subscribe to my channel so that you keep updated with various tax knowledge. And in the case you have any concern or you want any clarification, please write the questions on the comment box. We will definitely get back to you. Thank you.